Good morning and welcome everyone to the Schwab Live YouTube channel. It's our Wednesday edition of Trader Talk in today's market, and I am your host, Kevin Horner, joining you from our Denver studios today. I am pleased to be joined by my friend and fellow Schwab coach, Brent Morris. Good morning, Brent. It's good to see you. How's your Wednesday shaping up?
So far, so good, Kevin. I'm happy to be here with you. Happy to talk about the markets. Got some fun stuff, and it's NVIDIA Day, everybody. So we'll talk
Yes.
about that a little bit here. Yeah, let's kick it off.
You got it. Yeah, it is NVIDIA Day. In fact, we will be hearing from NVIDIA after the close, and we had a PCE report today
Yeah.
that didn't seem to be too market moving in the pre-market, but we'll look at how the market's shaping up this morning. Look at NVIDIA, maybe some CrowdStrike as well, as we take a look at how maybe what to be thinking about and expecting for the remainder of what's been a pretty quiet week so far. Now, today we are joined by our friend and fellow coach there, Barb Armstrong, in the chat. So take a moment and say hey to Barb, who can get to comments and questions. Brent and I are unable to, but we always keep a close eye on what's happening in chat. A lot of familiar faces and names in there as usual today. So thanks for being here this morning, everybody. And if you're new, don't forget to subscribe to the channel we call Trader Talks. And you can follow the three of us coaches on X, Barb Armstrong, CS, Brent Moores, CS, and Kevin Horner, CS. It's a good spot to locate us when we are not hosting classes for you here on the channel. Additionally, it's the spot where we have an opportunity to reply to you. So if you see a post and you have questions, you're welcome to place them in X, and we can actually reply in X as well. That's your best chance to hear from us. So feel free to do that, everybody. Now, before we move into our discussion, I want to get to disclosures so that we can cover the chart. So please remember, everything we discuss today should be considered informational and educational only. We're not making recommendations here, nor endorsing any specific approach to trading the market. What we are going to do is discuss the trends and charts of the marketplace broadly, and then more specifically into sectors, industry groups, etc. And as we do that, we'll offer up insights from the vein of technical analysis. All of these are just concepts and strategies traders who utilize technical analysis may choose to employ on their own. The extent to which you choose to do so is entirely your discretion. So please customize your approach, make sure that it's comfortable for you relative to your tolerance for risk and so forth. All of that is very important as you're becoming a trader or even honing your trading skills. Now, beyond that, we'll remind you of our process, which is fairly top down in nature, meaning broad, starting with our indices. We'll whittle our way down into sectors and industry groups and look thereafter at stocks in the news. Now, before we kick it all off this morning, one thing I just wanted to remind everybody about, don't forget that we offer you these in-person events. In fact, coming up this weekend, I'm going to be in New York City for our Advanced Option Strategies workshop, but we also have coming up thereafter our September market drive in Scottsdale, Arizona. This is happening at the Phoenician Hotel. It's a gorgeous location for those of you familiar with the Scottsdale area. This market drive is your opportunity to get to see what the Schwab Center for Financial Research has in the way of expectations going forward for the end of the year. The market drive is a one-day event and a really good opportunity to get that view of expectations, perhaps, for where we are in the market, what to look forward to at the close of the year, the final quarter here, as we wrap up what's been a really good year thus far. So all of our events, of course, these in-persons are entirely complimentary. We'll pick up your parking and offer you lunch as well. And in the market drive, we wrap up that one-day event with a networking cocktail hour. So for those of you in the area or going to be in the area, we'd love to see you there, everybody. So with that, let us, Brent, get to the S&P 500. Take a look at how we're moving this morning off the open. We're really just trying a little bit of price discovery here, aren't we? At that 20-day moving average, it seems. We've pulled back a little, but we've not broken down by any stretch.
Yeah, I mean, we had a bunch, we had some volatility there, and then um, it's lately, the last few days, like from there to we're basically where we were just a few days ago there on that.
Yep.
So, so yeah, price discovery is probably a good word on that. But here's the thing: we hit the bounce, and we had a potential support level. You can see that, and That's what we wanted to see. It was kind of
Yeah.
right off the 20, and 20 is still going up. It's moving up. And so, I don't know where we're going from here, but that's kind of what we want to see. When we look at the market and you look at the past in the market, it seems like every time we get a drop, people go, well, oh my goodness, this is like this huge drop. It's a big thing. I'm really worried. I'm really worried. But repeatedly over the past year, we've just continued to trend up. And now that doesn't guarantee that's always going to be the case. At some point, maybe we'll start a downtrend. But to this point, we haven't started a downtrend. We've just had little pullbacks. And, until proven otherwise, I'm kind of assuming I'm going on that assumption right now, Kevin.
Well, so basically what you're saying is the trend is our friend, Brent, until something changes. Is that ultimately what you're getting at?
That's a good little cliche. You could possibly coin that there. Yeah.
Oh, I think that one may have been coined a little while ago, but happy to work with it nonetheless. Yeah, I mean, again, as usual, we tend to parse every single detail. One thing that should not surprise us, I think, is the quiet nature of the market so far this week in anticipation of today's earnings on Nvidia, which will typically shed some better light on expectations as it relates to really the broad reason behind our rally, the capex spending and the AI build out in a multitude of manners. And really, the more we continue to hear about the health of such a build out and the willingness of companies to continue to spend on said build out, then the most likely product going forward is a continuation of what we've been seeing. And so I think traders are maybe just positioning a little bit to hear from Nvidia, to hear from Jensen Huang this afternoon and say, all right, we've got that confirmation. We can put the rally, we can be comfortable putting our dollars back to work here. Or they're going to say, well, maybe not. Let's go ahead and build a little bit of cash. But to this point, Brent, we haven't seen a move quite like that, and nothing in the way of price action that would suggest anything other than what we've been witnessing.
Yeah, regarding that NVIDIA, what's the importance in NVIDIA? Well, you just mentioned part of it is it gives us an insight not just to NVIDIA, but the whole AI spend, the data center type situation here on this. And but keep in mind, just looking at NVIDIA is 7.4% of the S&P 500. It's 12.6% of the NASDAQ. That's massive, largest company out there. And it's also held by 873 U.S. traded ETFs. So
Whoa.
It's a big company. You guys know that, and its influence isn't just because it's a big part of the market and funds and indexes, but because of what you can extrapolate from it onto the rest of the market.
Mm-hmm. Yeah, and that's really the deal, isn't it? It's the conversation after the fact. It's the numbers are fine, but it's also the commentary, expectation of spend. How are we in the way of supply, and can we expect to continue to see the willingness on the spend side of things, which is really driving so much of this, right? There's that question around the circular nature of the spending in the AI area of the market. And until capex spending changes, I think a lot of the market believes that there's every reason for the uptrend we've been participating in for it to continue rather than to break down. And so, as we often say, Brent, we don't know what's coming next. You already stated as much. We don't. But we do know some areas where we would feel a little bit less comfortable with what we've seen, and areas where traders might get a little bit more willing to take cash off the table. Perhaps the 50-day moving average is one of those in purple. That's only about 120 points away from where we are. And if I was going to give you a subsequent level, maybe the last area of support down below at around 7280 up to 7300 could give you another layer for trend management. But for now, it's a lot of the same stuff, a lot of the same trend continuing. So, but I did, as CJ is saying, Brent, your number of ETFs there, that was a shockingly large number, 800 plus.
Yeah.
I wasn't even sure if there were 800 plus
Yeah.
US ETFs out there. My goodness. Okay. So we know that. So basically, what you're saying, NVIDIA, kind of the Ron Burgundy of the market right now, kind of a
It,
big deal.
kind of a big deal. I mean, it's the biggest.
Yeah.
It's kind of interesting because when we look at the earnings season, we're way past most of the earnings season here right now on
Yeah.
everything. There's really like for the last few weeks, really the only thing left in the earnings season that people were really focusing on is Nvidia, and today's the day on that.
So, Brent, much of what we've seen in terms of recent action is similar in scope to the S&P, although the broader trend is a little different here, right? We've got a lower high in the NDX versus whereas the SPX went to new highs. We're pulling back in the same time frame that we're seeing the S&P pull back, but the NDX is not trading at those elevated levels like the S&P is at this point.
No, it's not. And we can use this. And if we were to like look at this, if if we were to go and I don't even know what how many months we're looking at, but if you were to look at the last few months here right now and pull up, say, well, we can't do it because it's an index, but
Yeah.
let's pretend we could do a volume profile here. Where has the trading been? We're clearly in a zone. I mean, this is an area of comfort, and until there's more information to boost us out of this, if we get towards the upper part of the zone, let's say we go up in this range, I'm going to start to consider that more maybe of a resistance level and look for a resistance bounce. And if
Okay.
we get down kind of in this range, I'm going to start to look for support here because this seems to be a comfortable area where the Nasdaq as a whole is trading right now. That'll change at some point, but usually it'll just be some new kind of narrative in the market in terms of, hey, market's looking good, or we're concerned about inflation, or whatever that is. But right now, that's where we're at, and you can see that reflected in the moving averages, which are just kind of meandering, if you will.
Yeah, we have the 20 crossing the 50 to the upside because we finally, about what, 20 days ago got this move where we started moving off of our lows. And so the 20-day speedy moving average is finally moving up. Price happens to be below the confluence of the 20 and the 50. So, of course, we'd love to get right back above it. But I think the bigger takeaway, Brent, might be my rectangle here. I'm lifting off. Notice that yesterday's low right here, the low was 28,875. And then our high from the gap day was 28,842. So we came close to testing the gap level by 30 points, but really 30 points on a $29,000 level, 29,000 point level, that's nothing. That is negligible in the grand scheme of things. So it looks like what we've done, Brent, is really test the horizontal support here and more or less validated this level as short run support, meaning that if you're a short-term trader, the risk is to the downside if we get under that 28,860 level. And some traders, Brent, might use that as a reason for building cash or moving out of in NASDAQ or maybe even tech specific positions.
Yeah, and so we don't, but right now I think the point is we don't really have a clear trend on
Sure.
this, and it will that could change because we have, we have the support bounce, we have a crossover, although we're below the moving averages, and if this continues to establish higher highs, higher lows, we can end up in this trend. But in terms of short-term support, you're spot on. That's where the support level is, and we're seeing the bounce that has held at this point. And
Mhm.
yeah, traders, shorter-term traders will look to that as a data point to look at.
Yeah, so I think that bears watching. The fact that we came off of that level and had a day at the 50-day yesterday and then a nice green candle today, we'll see how this plays. Obviously, tomorrow could be a very significant decision day for a lot of traders because you're either going to feel more bullish and more optimistic from here, or perhaps less bullish and less optimistic in the near term. And maybe we're in a scenario where the chop continues because it's been a bit of a choppy market over the last couple of months here. And To be honest, that no one's to suggest that that might not just stay the same as we head toward the midterm elections, Brent. And that's actually
Yes,
kind of a commonality in
good
our
point.
market, broadly speaking, isn't it? As we move closer toward midterms.
Absolutely. There's the uncertainty of that. And there's also the other perspective I would say on this is chop isn't so bad when you had a run that went like this, because the alternative is either a big pullback back to where
Yep.
we were, or continuing on that run, at which point all you'd be hearing about in the news is bubble, And so I'd say can I call it a consolidation, Kevin? I don't
Sure.
think bad. I don't think that's a bad scenario that we've seen.
No, you know what? We call them bad scenarios only because we're impatient as investors and traders. We want things we love 34% up moves in 9 weeks. Can we get back to that, please? That was more fun. That's ultimately all we're talking about. But we know better. We know that if you get 35% move to the upside in 9, 10 weeks, chances are you're going to need some time to digest that move and validate those new price levels that we've achieved. And now, because the market is future looking 100% of the time, it's always looking out 6, 9, 12 months. So now we're going to be digesting current commentary, news, etc., for expectations moving forward. Brent, a lot of similarities in the Russell, but I got to say, I'm pretty encouraged by the action on the Russell still. I've been saying this for a while. We've been using the 50-day moving average so consistently here, dating back to April 8. This looks about as stout a supportive moving average as you'll find. That does not mean it's going to hold in perpetuity, as you all know, but what it does mean is that a series of closes, a confirmation of closes below the 50-day, would be a significant shift and development for the small caps here, Brent. What other things are you thinking about beyond the 50-day, or as you evaluate the trend on small caps, broadly speaking?
Yeah. So what I would say is this has been the strongest of our major indexes, small caps. This has maintained this kind of this you can tell it from the 50-day moving average, but just this clear higher low progression on that, and
Hmm.
higher high progression on this. And so that's bullish. And as you mentioned, that may change here on this. It's at some point that is going to change on this. But as we look at this, we've bounced off the 50-day, and we're well above, if you look at your moving averages, if you look at your 20, you look at 50, you look at your 100-day moving average, your 200-day moving average, they're all sloping up right now, which is giving you different time frames here that are, sometimes people will say, what trend, what moving average should I use? And what does it tell me about the trend? Well, what it tells me about the trend is um, it gives me the trend over different time frames. If our stock price, or in this case index, is above an upward sloping moving average, then I would generally kind of deem that to be an upward trend. Well, then the next question begs the question of, well, which moving average? Well, it depends on which trend. Longer term trends, you can use the 100 or 200-day moving average. More intermediate term, you can use a 50-day moving average. Short term, maybe a 20-day moving average. But that's what we're seeing. Now we're kind of right at that 20-day, so maybe not the strongest short term right now,
Hmm.
but as we broaden out, the trend continues. And hey, we're kind of right at that 3,000 level on the Russell 2000. Those kind of roundish numbers sometimes can be significant. Can we hold this level? Uh, we'll see.
You're right. And those round figures, because we're nothing but humans, and we have these, I like to call it the lizard brain activity that just brings us back to a willingness to fall back into comfort at round figures or rounding numbers off because it's easier for us to do the math. That's just the way that we are. If we can do better than that, then we should, and try to be a little bit more, a little less willing to round our processes off a little bit. Brent, we should probably look at the semis. The move in the semis has been a little less enthusiastic, as you can see, below the 20-day. We filled the gap deck here yesterday or 2 days ago on Monday, I guess. And now maybe there's some short-term horizontal support, but I still feel like this is just a story about NVIDIA, waiting to hear what NVIDIA
Yes.
has to say more so than anything else.
Yeah, NVIDIA, I would be shocked if it does not move this index a fair amount. You never know. I mean, NVIDIA could be unchanged coming into tomorrow, but that's an unlikely scenario. So, yeah, I think this is going to be a news-driven event here on this. But from our peak, we're down a ways, and I don't know. We'll just have to wait and see on this one, Kevin. I don't have much more on that other to say. We have a support level, but we could draw support levels or trends or price patterns. But news can trump all of those, and earnings on NVIDIA is big news.
It is. And, the other thing I have to bring out is that we're not seeing RSI and momentum validating any kind of alternate to what we're seeing in the trend. In fact, it's validating the bearish nature of the trend. We've been below the 50-day moving average really since at least mid-July. So we're looking at about 6 weeks in length below the 50-day moving average. And that last move where the RSI made a peak when we tested the 50-day, that move was up to a level we should consider to be overbought conditions in the RSI when we are in a bearish regime, which is to say showing lower highs in price. And we know that while the traditional RSI suggests overbought conditions over 70, if we are in a bearish trend in the shorter term, Brent, we can find those overbought conditions in the 50 to 55 range in the RSI. And that's exactly what we got. We got the 50-day validated as resistance. We immediately pulled back. In fact, we had a gap lower the very next day, and that reflects a pullback in the RSI as well. So I think what we're witnessing in RSI terms, at least, Brent, is confirmation of that weakness and bearish short-term nature in the stocks.
Yeah, one thing I'd point out on this RSI is right now it's behaving kind of how you'd expect given the price action. If you look at the price action, we had this kind of downward channel there. Okay. Mm-hmm. Well, what did we have on the RSI? We had the downward channel. Subsequently, we hit a low and we've hit a higher low. So we've kind of broken out of that downward channel here, and now we're there. But before that, what we saw kind of the RSI declining here, while the stock was going, or index was going up. So we kind of see that's a divergence there up that we saw back here. This is a divergence here on the RSI, but this is not a divergence. This here is according to what we'd expect on that RSI. But what you can do, and what you brought up, Kevin, is you can use technical analysis, if you will, on an RSI and look at resistance levels on it. You can look at trends on it and higher highs, higher lows, stuff like that on the RSI itself.
Yeah, it's one of those reminders that the technical analysis can be done in a multitude of fashions. And we often say, we look at daily charts, but we see the same concepts played out in weekly charts. We see it in hourly charts, 5-minute bars, etc. The price action and technical analysis is fractal in nature. So all that means is you can apply the same ideas and concepts to any time frame you're considering, and with your oscillators as well. So don't hesitate to get a little more familiar in doing just that. Brent, we also noted this morning, at least off the open, we had a deeper move lower in oil. Let's take a look at crude using the futures symbol. Again, this is a reminder that we are not suggesting or advocating for futures trading, of course. Remember, this is absolutely going to carry a higher level of risk. It's not suitable for all traders. And further, in order to trade futures at Schwab, you do need to be approved in advance in order to do so. We're going to look at crude from just the standpoint of the trend. And I think it's obvious for those of you who have not been joining us, Brent, we've been talking about that downtrend line continuing, and we got rejected at it just this week, late last week too.
We did, yeah. So, I mean, I guess that's a good thing because most people want oil prices lower. It's probably better for the economy as a whole, if oil prices go down. But yeah, as long as that downward trend keeps working its way, it doesn't mean we're going down real quickly to, the 60s or anything on this.
Hmm.
But it does seem like that's the technical trend we have until there's some news that may move it, but it seems right now of late of people, it's just the same old thing. We have some news that comes out of the Gulf, for example, and oil goes way up or way down,
Sure.
and uh, and then now people are kind of like, well, yeah, it doesn't seem like anything's happening real quick on this, but the oil prices aren't that high, and so people are a little less. It's just a little less volatile right now, but we are maintaining the downtrend, as you mentioned. Good thing.
Yeah, good thing broadly speaking, but I think you're right. It's not the conversation that's driving markets the way that it was.
Right.
However, if you'll notice, while we are in this consolidation and oil is lower, energy looks a lot different, Brent. Look at the energy move
Yeah,
here.
that
Now,
is interesting, isn't it? Yeah.
we got all the way in and we made basically matching highs up here late last week. Now we've pulled back to the breakout spot coincident with the 20-day, and we're getting a bounce right there. And
Yes.
so, Brent, this may no longer be a story about the price per barrel, but rather the margins associated with the refiners and the oil producers and the drillers that is leading the energy sector to the upside.
Absolutely. So a lot of times you see a pretty high correlation between uh, energy as a whole and
Hmm.
oil. Though that correlation is broken down lately. And so energy has maintained its prices. And, that's why, even though oil's dropping, there's a lot of factors, a lot of stuff that gets done with oil.
Hmm.
And, uh, the refining process, stuff like that can, it affects different petroleum-based products differently, natural gas, heating oil, jet fuel, stuff like that. And um, so, here we go. That's what you see a difference here, and right now that difference is showing.
It is, and maybe that oval could call out an area where energy breaks down or gets a deeper pullback. But I think watching that 20-day in the near term makes a lot of sense. I'll point out that RSI here, as we tested the all-time highs, did get into overbought condition, so that validates to an extent the rally that we've been seeing in energy, which has made a really strong move, by the way, percentage wise. Off of these lows from just July to the peak, this thing as a group, as a sector, was up better than 22%. So that's a fantastic move to the upside. Now, we've seen also a bit of a continued move in the material space. So I'm going to lead us though with the dollar quickly because the dollar's breakdown on the heels of that Treasury buyback program increase was notable. Now, Brent, I can't help it, but this looks to me like a bit of a bear flag at the moment. And if this is a bear flag, if it plays out bearishly, which is to say breaks down to the downside rather than rallies further, and it certainly could rally more. I mean, we could see the 20 period come into play here. That's always a possibility, but we are right at the 200 day. I note this because the breakdown in the dollar has been instructive on some of the metals,
Yes.
notably gold. And
Yes.
again, future symbols, not validating futures trading, but I wanted to bring up the move we're witnessing here, Brent, and it has been notable in gold coming off the lows.
Yeah, a lot of it is dollar driven. The dollar can drive a lot of things, not just gold, other metals. It can drive things like, say, Bitcoin.
Heard of
That
it.
that can that can affect that. Now, I mean, obviously, there's a lot of other factors in there that can affect these things, but a weakening dollar affects this, and I think that's a large part of what we're seeing here,
Hmm.
um, in terms of gold. And yeah, I mean that's a strong reversal of trend. And it's not just a break of the downtrend at this point. I'd call it an uptrend at this point on gold.
Yeah, absolutely. I mean, and again, the move has been strong, 18% to where we are right now. RSI into overbought conditioning up here. So you're once more getting validation of the rally. Broken downtrend confirms more or less that the downtrend is over. And now the question is, which of the moving averages is supportive of a new uptrend? Could it be the 20-day? We're a ways away from the 20-day, a couple $100 an ounce here on this price at least. So that's notable. By the way, take a look at what the materials space looks like here, everybody. I'm going to use the index symbol. I'll back this off for you. Brent, this is breaking out. We had a pretty obvious resistance through here not that long ago. And once we took it out, we needed to come back and test it. So we had a quick breakout and throw back, and then it was right back up. So textbook type action from a technical analysis standpoint, that is.
It is. Again, you could tie it back to the dollar too. That's helping to boost this here right now.
So we've got a multitude of groups, working and moving in trends. We could also peek in on our industrials, which have maybe found an area of short-term support, albeit below the 50-day for the longest period since it got back above it back in early April. But the trend line seems to be held at least in the short run. So, that's kind of notable here. Keep an eye on the industrials. Let's look at a couple more of these, though. We've had some breaks to the upside. I think our staples have held into the range. Yeah. And our financials, there's healthcare, excuse me. Yeah, healthcare breaking higher. My good, Brent, is this going to stop?
But Moderna was a big help on that. That Moderna,
you're right.
That's the gap there on that. But and it's just huge. Moderna's kept up this huge volatility right now. You'd see the volume dropping on Moderna. You can see that at the bottom of the page. So not surprisingly, you have huge news. Obviously, you get big volume, and then you get some, continued news. But it's held and it's gone up. But even before the Moderna news, healthcare as a whole was one of the strongest sectors, and so it's just kind of that. Just helps push it along even higher there on that. But, hey, so there we go.
That's been just an awesome move in healthcare. The percentage move off of the lows back in late April have been pretty strong. Let me see what the percentage is on that, just to where we are right now. How about 22%? So really great. Of course, that 20-day is comfortable given the location, but it's also a ways away from where we are right now. So if you're, in your healthcare positions, waiting on a breakdown to be a seller at any point, some will work with a gap level, some will use the 20-day moving average, and some will say that's too slow for a moving average. Maybe I want a 10-day, but the 10-day hasn't been clean from a testing standpoint, right? You can see we've had intraday moves and a couple of closes below the 10-day, but right now the fact that the 10 days caught up to the gap ledge is pretty intriguing as a confluence for an area for short run support and an area under which some might use weakness to move on from a position. Go ahead,
using
Brent,
a 10-day is it's hard to stay completely above a 10-day for a super long extended period of time, especially for an index, more so than because you have up stocks and down stocks and whatnot. But still, the trend has been tremendous on that.
It really has. And then, let's just remind you that financials have been doing really well here collectively. You've got a group that's trading near highs. Also moving up beautifully, working against the 20-day moving average, 1-2 day below it, and then right back. This looked like it's dabbling with a breakout as we speak, doesn't it?
Yeah, absolutely. So we'll see. That's a key level that we can look at, a key potential resistance level. And even if we say, well, look, we kind of have this channel here. Okay, so now you just drew the channel. The question is, where's it going to break to? It could break down, and if it breaks down, we'd consider that to be more of a bearish break, or if it breaks up, it'd be more of a bullish break. But the presumption on these channel patterns, these price patterns, and this is true for a triangle or something as well, is what precedes it. If we have an upward trend before the channel, then most technical traders would say the more likely of the two scenario breakouts is that it's going to break out to the upside on that. But, we don't know at this point. And a lot of technical traders would say, hey, I'm going to wait to see which way it goes. But
Hmm.
it's a positive thing when you see that upward trend there on that.
Yeah, and the only maybe fly in the ointment could be the window of time it's been above it. You're looking at 58 bars, so
Yep.
almost let's see, 60, 12 weeks, right? So that's
Yep.
getting on the long end of running
Yeah.
against the
Yeah.
20
True.
day, to be honest. Now that doesn't mean it can't continue longer. There's always forces that are going to lead it higher. There's a potential for that. But it might be getting a little bit long in the tooth here. So perhaps not not guessing in advance of a move, right? You might expect a breakout. If you do, let it break out and then trade the breakout because that increases the odds that the breakout has legs, right? If you buy before the breakout, there's no guarantee the breakout's going to come. And that's one of the reasons that traders will wait and try and be patient as best they can.
Yeah. One thing Barbara
Yeah,
mentioned in the chat, Kevin, the RSI is weakening on financials as well. So that's, another
it's
thing that
true.
traders can look at on this as a sign of, it's our the odds of a breakout. Maybe, some traders would say maybe that doesn't help. That doesn't help
Hmm.
seeing the weakening RSI on that.
Yeah, I think that's a great a point to bring, and it balances again the view. Yeah, we've got a bullish uptrend, a little longer than maybe we expect, a declining momentum in the RSI, lower peaks than we've seen as we've made higher highs in price. All of that can be good reasoning for a pause in the trend or even a pullback to an area of longer range support. We'll see if it happens to go that way. Brent, we do have some stocks in the news. One of them
Yes.
is the Meta. Let's talk Meta here briefly. We understand that Meta has perhaps come to an agreement on a settlement, if you will, on the story that hit the news wires recently about
Yeah.
their impact on the well, I guess children, youth, etc.,
Right.
and the potential for addictions to social media. Now it led to an initial bounce this morning. It got all the way up into that 590 or so, 593 high, and has pulled back pretty aggressively.
It
Brent,
has.
it's really hard to tell a story on Meta though from this daily chart because this daily 1 year does not provide enough time. And if we backed it off to more likely, this is a weekly 5 year basis, you can see the downtrend that's been plaguing Meta. And it's really still unclear whether this resolves anything for Meta in terms of their price action.
Yeah, so concerns about Meta surrounding it, and just to give a little bit more on the the news, I guess, if you will, on that, they agreed to pay $16.7 billion in this settlement, which, I mean, that's a lot of money, but it's it's Meta. The
They've got a
state
lot
of
of money.
California could receive 1.5 billion to 2.1 billion if the settlement is approved. So
Hmm.
why is it not, initially it jumped up and went back down. I don't know. People maybe thinks that this is not the final word in this.
Hmm.
Maybe the settlement doesn't get approved. Maybe they feel, the longer term narrative that you're mentioning here of, hey, we've had weakness in Meta. Clearly, things have not been great for it for a little while. Does that really change this bigger narrative, the meta
Hmm.
narrative, so to speak? Um, and the answer is, I guess the jury's out on that, but we're kind of near the bottom of this, near potential support. We'll see.
Yeah, it could be. I guess if I was going to pick anything that offers maybe the least amount of comfort for a trader. It's a manually drawn trend line, Brent, because it's my own trend line. It's not the market's, moving average or anything like that. Trend lines that we draw are always in the eye of the beholder. And so that's a little dubious about its ability to maintain. But I got to say, the 200-week moving average down below in blue, we've been above since, so looks like early 2023. So you're looking at about a 3-year uptrend, essentially, that's been holding the 200-week moving average. And, that could be an area where traders would be more comfortable exposing funds. But, you've got a clear series of lows here over the last 6 months or so, and maybe some traders are looking for these lows to maintain. But yeah, it's been a bit of a rough ride for Meta, as you can see, up near 800, trading now at 570. That's it's a heck of a pullback on a very large company. So we'll see if
Yeah.
this can do much more than just settle out here, Brent, at these levels.
Yeah, that 200, I mean, a 200-week moving average is a long moving average. And, some people will use that. But right now, if you look at the 100-day, the 200-day moving average, we're below both of those right now. If we're looking below, if we're on a daily chart and
Yeah.
we're looking at the daily moving averages there.
Yeah.
So that's more the trend that I would say probably most traders would be factoring in. But I think it's good that you brought up the long term, the real mega long term, the 200 week, to give you maybe the longer term story.
I think so too, Brent. Let's I should also mention Truist downgraded Nike.
Oh boy.
Nike's just, I hate to be piling on, but Nike's had a really rough go of things here. We're trading at 39 bucks. Nike was downgraded at Truist to hold from buy, a target at 42, down from 47. The earnings report out of Dick's signals incremental murkiness around Nike's turnaround progress. So this is on the heels of Dick's sporting goods report. Here, by the way, here's the long range on Nike.
Yeah,
Look at that 100 week, Brent. My goodness, this goes
it's
back
terrible.
to February of 22. This has
Yeah.
just been a really rough go for Nike.
I posted it on X.
Yeah.
By the way, you can follow Kevin or I on X at Kevin Horner CS, at Brent Moore CS, or Barb Armstrong at Barb Armstrong CS.
Mhm.
I did a 10-year chart on Nike yesterday, I think, and it was yeah. I don't know if you have a 10-year, but
I'll
it
make
was
it
just
10.
like a
There you
big
go.
mountain peak
Woo!
there. Yep,
Oh my goodness.
just up and down. It's like we're back where we were 10 years ago there. So I don't know what the future holds on that, but it's right now. I mean, you can pull out your 200-week moving average on that, Kevin.
It's not gonna.
Kevin.
Oh my God. I prefer the 100, and maybe even. I mean, wow. Look at how just every bounce has just been sold aggressively. What a rough go.
Yeah.
And apparently it's not just Nike, Dick's was also downgraded at Truist, so they're kind of leaning in here. Let's put up the Dick's chart real briefly for y'all. That's an ugly weekly move. That's about as ugly a weekly chart as you're going to see, Brent. My goodness. Truist downgrading Dick's to hold from buy, target at 135. They cut in half from
Yeah.
270. That's lovely.
Yeah, with Dick's they had a double miss, so earnings miss, sales miss, and a forecast, a downgrade of the future. They just kind of like, well, we can't say much about the, it was their forecast, their guidance was very poor, I guess, on
Yeah.
that as well, and that's what happens when you get that.
It's true. And Mr. Christopher is asking what's causing this heavy downward trend on Nike. Well, it's a series of events, really, but it really stems from, more than anything else, their decision to move away from the stores. They did partner with Dick's exclusively, though, and moved out of stores otherwise, and kind of made themselves available direct to consumer, thinking that that was going to be the avenue that would give them lift. And it's been the exact opposite, Brent. Unfortunately, they've not only has that not helped them out. It seems if you read customer and product reviews, the commentary is that they're just not up to par with some of these smaller shoemakers that have done far better in the way in the last few years. Your Hoka's, for example, just as one, but that's by no means a recommendation, of course. Brent, I thought we should also, very last thing, let's just look at the Nvidia and maybe CrowdStrike, both of which are reporting after the bell. And I just wanted to call out the market maker move expectations here. Implied volatility is a little light. Now, Brent, we're talking options to this extent, but we're not encouraging options. You all know options are higher level of risk and not appropriate for all of us. But Brent, this move, this $12 move on a $212 stock, it's a little light relative to what we've seen historically from Nvidia.
Yeah, but that's a good way for you guys to look at this. You don't have to trade options to do this. You can look and see this is just kind of what the market is pricing in terms of the move there on that potential move. About a 2/3, but roughly 68% chance it's going to be within up 12.5 bucks or down 12.5 bucks. Not directional, just one or the other. And there's obviously a chance it could break out beyond that, but using this measure, you can get an idea of how much different stocks are going to move. So if you compare that to something else, you'll see the difference in the move.
Yeah, so here with Nvidia, that move percentage-wise doesn't look as substantial, but if you looked at Crowd, just as an example, $14 and their stock is about 20 points cheaper than Nvidia, so you're getting more like a 7.5% move in terms of the expectation on CrowdStrike. Once again, as Brent said, no directional commentary here at all. This is just volatility, nothing more. So take that with a grain of salt. Everybody, we are at time. Wide-ranging conversation for you all today. Brent, thanks for being here, sharing your thoughts, sharing your insights. Let's reconvene next Wednesday.
Awesome. Sounds good, Kevin. Thanks, everybody.
Excellent. Terrific. So thanks to all of you. Thanks to Barb in the chat. Follow us on X. Hit that thumbs up if our conversation was helpful for you today. That helps us out quite a bit on the replay. And make sure you're subscribed to the channel. If you're out there in New York this weekend, make sure you stop by and say hi. Otherwise, have a fantastic Wednesday, everybody. Look forward to catching up with y'all again real soon.